Hi, I'm Amiruddin. I will be explaining on the going concern concept in the audit perspective. What is going concern? Going concern can be defined as the ability of a company to remain in business, which is to remain sustainable in the near foreseeable future, which is usually within 12 months or more depending on the company. Conversely, this will mean that the company will be liquidating its assets or ceasing its operations. Moving on, why is the going concern disclosure important? According to IAS 1, when preparing financial statements, management shall make an assessment of an entity's ability to continue as a going concern. An entity shall prepare financial statements on a going concern basis unless management either intends to liquidate the entity or to cease trading or has no realistic alternative but to do so. This means that if the financial statements of an entity is not prepared on a going concern basis, it will be prepared using a breakup basis, which will have several implications to the entity. The implications will include lower valuation of assets because the assets will be valued at a value if they were to be sold at the market in that particular period of time. Second, lower inventory and redundancy costs and other related costs from liquidation of the company. Moving on, the audit of going concern. I will explain on the responsibility of entities management and the responsibilities of the auditors. Management is responsible for making the judgment of the going concern status of the entity. The going concern assessment needed to be carried out by the directors should consider all factors about the foreseeable future of the entity known at the date of the approval of the accounts. Management should make assessment of the going concern with consideration of the following factors. First, the size, complexity, nature, and conditions of the business. The level of detail of the assessment and extent of procedures required would vary in accordance with the size and complexity of the entity. Second, judgments are made on the information available at the time, and this is stressed in ISA 570 going concern. Moving on, after the directors have made their assessment, they must conclude either one of these three things. First, there are no material uncertainties that may cast significant doubt about the company's ability to remain going concern. Second, there are material uncertainties related to events or conditions that may cast significant doubt about the entity's ability to continue as a going concern, but the going concern basis is appropriate. Lastly, the use of the going concern is not appropriate. Moving on, the auditor's responsibilities. ISA 570 clearly outlines the objectives of the auditor in respect of the use of the going concern basis in the accounts. First, to obtain sufficient appropriate evidence regarding the appropriateness of management's use of the going concern basis. The auditor has to assess whether adequate disclosures are given by the entity's management. Second, to conclude on the basis of the audit evidence whether a material uncertainty exists in respect of events or conditions that may cast significant doubt about the entity's ability to continue as a going concern. And finally, to determine the implications of the auditor's report. Audit procedures that can be followed by auditors include analyzing and discussing cash flows with the management, and analyzing and discussing interim financial statements, reading the terms of debentures and loans, among other procedures. Moving on to a real-life case study involving Austrian Airlines in 2009. Austrian Airlines is an Austrian-listed company whose principal activities is the operation of an airline. Its 2008 IFRS financial statements were approved for issue on 12 March 2009. In its 2008 IFRS financial statements and annual report, the company made disclosures that the European airline market will be characterized by ongoing intensive competition. The high hedging share of numerous airlines, which was built up during the course of 2008, could prove to be a major challenge in 2009 for the company. Even the International Air Transport Association predicted a loss of $2.5 billion of the entire airline branch. The Board of Management disclosed that in 5th December 2008, Austrian Airlines had entered into an agreement under which control of the company would pass to Lufthansa, another airline business, and that as a result, additional financing and liquidity would be implemented on schedule, amounting to 500 million euros to the entity, which would subsequently be carried out. These are the reasons for the judgment that the entity is a going concern. The management also disclosed that if the preconditions underlying the agreement are not fulfilled or are fulfilled at too late a time, the board of management will not be able to assume the continuing existence of the company without alternative financing. They are disclosing that there are considerable material uncertainties. Thus, the auditor made his opinion and did not qualify his opinion due to sufficient evidence and disclosures, and accepts the judgment of the board members that the entity has the ability to stay going concern and that there is substantial material uncertainties. In relation with that, the EU Commission proposed a rescue aid amounting to 200 million euros to Austrian Airlines, which would further strengthen the going concern status of the company. Thank you.